Welcome back. We are 30 minutes away from the opening bell on Wall Street for a Tuesday, and we are now on countdown mode. Futures this morning are mixed. The Dow Industrial is down 254 points, with the Dow getting dragged down by a huge sell-off in IBM. IBM issuing a warning on spending, earnings, and revenue, saying that they're seeing a shift in spending from some of their large customers. IBM shares down 22%. This warning is raising concerns over whether AI spending and revenue are about to slow down. IBM on track for the worst day for the stock in history. Meanwhile, 5 major banks reporting second quarter earnings this morning. You had J.P. Morgan, Wells Fargo, Bank of America, Goldman Sachs, Citigroup, all reporting double beats. And we are about 30 seconds away from the consumer price index, which will be hitting the tape very shortly in seconds, and that may very well be another market mover. Let's get into it with Mendon Capital Advisors President and Chief Investment Officer Anton Schutz. Anton, great to see you. Thank you so much for being here. Kicking it off with the bank earnings, give us your reaction to what stood out to you with these major earnings this morning.
Well, I mean, the trading side was just pretty spectacular. Anticipated, right? But still really off the charts from a performance perspective. And, you know, the earnings, obviously, they all beat. But typically what happens when stocks move is, as they all did, into earnings, you've got to sell in the news, and that's what's going on this morning. But at the end of the day, these earnings build capital, and buybacks will be important, and dividends will be important, and, you know, lack of regulation will be important. So, you know, these stocks will rebound at some point in time. But, yeah, today is a sell in the news. No shock to me that this happened. But
well, look, we are getting breaking news across the board. The consumer price index is out, and it looks like that's actually much better than what we were expecting, because the Dow Industrial is now positive. Cheryl Cassoni with the numbers now. Cheryl.
Talk about a reversal. Okay, so month over month, we came down 0.4%. So negative read on the headline month to month. We were looking for 0.1% to the downside. We got 0.4 to the downside. All right, year over year, listen to this. 3.5%. The street was looking for a gain of 3.8%. We got 3.5%, and last month's read was 4.2. So look at that decline there. Okay, core month over month CPI flat, 0. The street was looking for a gain of 0.2%. And then also core year over year, all of this better than expected. 2.6% is the core number. We were looking for 2.8%. That is also a nice decline from last month, where you had 2.9%. Now, U.S. short-term interest rate futures jumping after this data. Traders have just slashed their bets substantially on any hikes coming out of the Fed. Let me give you one more little about where the story is with regards to CPI. If you take out food and energy, that 2.6%, but energy down 5.7%, gasoline down 9.7%, new vehicle sales were flat, food a little bit of a gain, housing flat. You know, that shelter component, owner's equivalent of rent of a primary residence, 0.2% to the upside. But again, Maria, this is where the story is. I'm going to give you a couple of lines from the report, and I'll send it back to you because I know Anton wants to jump in here. But basically, they're saying that this is the biggest decline in the all items index since April of 2020. They're also saying that it was all about the energy story, that 5.7% decline that I told you about. That is the biggest story within all of this. So this is the energy story. This is CPI. There goes the markets. Maria, back to you.
Thank you so much. A complete reversal. This is an excellent number on the consumer price index, down 0.4%, underlining what we saw in the second quarter with regard to energy. And we are seeing a complete reversal in markets this morning. Anton Schutz, your thoughts on what this volatility is telling us this morning with stocks trading mixed, but now higher across the board. The Dow Industrials are getting impacted by this IBM sell-off, but it looks like this market wants to go higher. Your reaction?
Well, the market does want to go higher. I mean, there's a broadening out of the earnings in the entire market. And I think, you know, obviously the narrative has moved away from the Magnificent 7 or 8. And clearly the economy is doing fine, right? The big banks will tell you credit is fine. They're talking about loan growth. Jamie Dimon's talking about loan growth. So the economy is doing very well. The Fed is not raising rates. You know, why do you want demand destruction when you have a housing market that's still limping along? Yeah, the stock market's doing very well, but that other economy is critical, and the Trump administration wants to help housing. So I don't think Warsh wants to raise rates. People have been talking about raising rates, I think, is nonsense. Why do you want demand destruction when it's really being driven by energy prices? We just saw the impact of energy prices to the negative. Obviously, we can see it, back again if we don't end this thing, relatively soon and get the Strait open. But, energy prices are key. Demand destruction is not the right way to run an economy. I don't know why the Fed is focused on that. And clearly AI has caused a lot of great economic activity going on. The buildup of the data centers is tremendous. And it's a big driver of the economy. So, really, you're going to destroy that by raising interest rates? You're not.
Look at this. Rates are dropping like a rock. Anton, the yield on the 10-year down right now at 6 basis points after the CPI number. And the details on the CPI number are really very, very strong, indicating that, in fact, this is not the issue that so many thought that it would be, given the spike in oil prices. But in the second quarter, we actually saw oil prices come down pretty significantly, giving us this decline in the CPI overall of 0.4% this morning. But I want to play the Fed Governor Waller for you, because you say, why would anybody think to raise interest rates? That's exactly what Waller was suggesting yesterday. Watch this.
Because core inflation is a good guide to future inflation, I am concerned that if this upward trend continues, it will be hard to push inflation back toward the committee's 2% goal. But I am concerned about the equally plausible case that data in the coming weeks will show that inflation will remain at its elevated level or even trend higher, requiring tighter monetary policy in the near term. I am committed to returning inflation to the FOMC's 2% goal, but also determined to avoid over-tightening policy and risking a recession. Tomorrow's inflation data will be one of several data releases I'll be looking at to determine the appropriate path of policy.
So you wonder, after today's consumer price index, Anton, if Waller changes his tune.
Well, he spoke like an economist. He kind of said on one hand and on the other hand, if you really, parse through it. But yeah, he's data dependent, and these short-term data points, I think, look, this is great. The last ones were bad. So, you've got to look longer term, and energy is, major driver. We've got to resolve that. I think it will get resolved. And once that happens, the economy will continue to do very well.
And so you would be buying bank stocks right here?
Absolutely. I'd continue to own them. This deregulatory environment is terrific for them. And we've got a nice yield curve.
All right, we'll leave it there. Anton, great to talk with you. Thanks so much.
My
Anton
pleasure.
Schutz this morning on banks.